Yo, what's good, guys? Let's get into today's video. This is gonna be going over cross candles, another one of my concepts. So as you guys can see here, this is my first concept. It is called OCVI, on chart volume imbalance. It is where you see how these two candles purposely don't form a fair value gap and they wick into each other. Okay, that's my first one. So as you can see, most candles actually end up having a fair value gap, but whenever we are in a displacement to the downside, and other candles are normally forming fair value gaps like this, like this, like this, like this, like this, like this, and then there's all of a sudden a candle that purposely doesn't form a fair value gap. It is a on chart volume imbalance. It is showing disorderly activity within this price range. Alright, now let me show you my second concept. This is called crossed candles. It is a three candlestick pattern where there are 1, 2, 3 candles. I'll make this easier for you. 1, 2, 3. Okay. As you guys can see, this first candle wicks down. Alright. Can I draw? Kinda. This first candle wicks down. Alright. As y'all can see, this is the candle wick. Okay. Now, this is the body. Now, whenever the next candle forms, okay, the next candle formed. No big deal. But it's the third candle that matters. So we're only looking at the center candle after the third candle matters. You see how these two candles completely overlap the body. This one covers it on this side and this one covers it on this side. This is called a cross candles, or like CC for short. All right? This is a very, very high confluence trading setup, all right? Now, I'm going to delete everything on the chart and I'm going to show you guys what this actually looks like. Read this. Alright, you read it. I hope so. If not, you can just go back and look over it. But let's look at what price does whenever it gets here. Perfectly mitigates it, okay, because most imbalances should be mitigated. Mitigates it to the tick. Stop loss above the imbalance, because this is the strongest form of imbalance on the trading chart, and I created it. I think so. I've never seen anybody else use anything like this. Okay. This is what it looks like. Now, let's look at the RR we could have hit with this. Assuming you'd just go to lows, or maybe not even lows. Assuming you'd go to, like, what would we realistically target here? Well, we see that there's this thing. See, there's equal levels. Probably that is realistically what I target. Because I don't know if I'm expecting price to sweep, considering price manipulated at 10:30. Actually have a bullish bias right now. But say we did end up taking this trade, we could hit a 1 to 73. Now that's not it. How much drawdown were we in? One tick of drawdown. One tick. Look at this, guys. See this right here? What RR is this? 1 to 700 if you hit this, alright? Okay, that is the confluence. Let's find some more examples. This thing is not easy to find, but we're mainly looking for it inside of displacements. You guys see how price is moving down? When price is moving down, it should be forming fair value gaps. But whenever it purposely does whatever the heck this, where is it again? Whenever it purposely does this, it is saying something to you. Now, where do you mark it out? I don't think I went over that. You're going to mark it out from the two candles. So from this candle to this candle. Alright, that's going to be the level. So let's find some more examples. Alright, I don't think there's any more inside of here. Let's find some more. That's on the 15 minutes, so I might be able to go to the 1 minute and just look at some things for you. But I did like the higher time frame ones more. I'm not sure how these work on lower time frames. I assume it's the same, but we're really just looking for displacement. I'm gonna look near 930 because that's whenever the price is most traded. Okay, so price wicks into whatever this is. Let me see if there's anything here. Let me go on that 3 minute. Okay. Literally my other PDA is right there. Alright. And what do you know price does? Literally that's my other PDA right. That's low-key crazy. I'm just trying to find cross candles. Man, I'm telling y'all, this is not easy to find. Right there. Holy moly. I'm telling y'all, bro, this thing works. You're lucky I'm leaking. This is all I'm telling y'all right now. But that's another cross candles right there. This one doesn't end up getting mitigated. But if you were to enter, now with this, you're probably gonna need to use a limit order if y'all want to. Stop right above the high. You don't expect price to get any higher than that. Could erode to the lows. Alright. Do y'all know how much that's a 1 to 50 RR? Alright. Now how much drawdown were we in? Let's figure out the RR if we just were going off drawdown. Ooh, 1 to 150. Alright. Yep. As y'all can see, we are not in displacement right here. Okay? We are in a range. We are consolidating here. Okay? We break the range and start to displace down, I swear, at this candle. Alright? And what happens right after that? This gets formed. Price needs to form orders. Literally, this is not a coincidence. Alright? What is that? Probably not even news. It's at a random time. Alright? So I am leaking my concepts with y'all. I could find some more examples, but I think my point's been proven. So my point has literally been proven. Alright, this is called CC cross candles. Alright, this is my concept, and what else is my concept? CVI. On chart line amounts. Alright. Those are my two concepts that I've personally released. I've also released another one that was kind of BS. Is like trend angle analyzer. I'm not even gonna look at that though. These are the two concepts that I've released that I'm taking credit for. If you guys do make any videos about them, make sure you guys credit me. Definitely trade off them. They are the strongest confluences ever. Like, dude, yeah.